Podcast Network Asia.
You are listening to First Metro Securities Philippine Stock Market Weekly podcast, where we feature timely and relevant discussions on the Philippine stock market and the economy in the hope of providing you investing and trading guidance. Here's your host.
Hi investors! It's Anjz from First Metro Securities, and welcome to another episode of Market Bites. If you're on the lookout for fresh trade ideas or curious about which stocks are worth watching, you're in the right spot. Today, we're diving into highlights from our latest company update on Universal Robina Corp or URC. We have just upgraded URC to a buy rating with a new target price of 95 pesos. Why the upgrade? Well, we've rolled forward our valuation to next year and fine-tuned our FY26F earnings outlook. Here's what's driving our call. First, you have modest revenue growth despite competitive and tariff pressures in key markets. Second, there's a favorable commodity cost outlook expected in 2026 until 2027. Also, there's margin recovery already underway as input costs begin to ease. So let's break that down a bit further. We expect demand for branded consumer foods to remain resilient, underpinned by tame inflation, steady employment, and improving consumer confidence. However, revenue growth will likely be moderate, rising by mid-single digits over the next 2 years, as URC navigates tough competition and possible delayed effects of tariffs in its key markets such as Vietnam, Malaysia, Thailand, and Indonesia. Now, on margins, there's room for optimism. Commodity prices, especially for URC's key inputs like wheat, palm oil, cocoa, and coffee, are projected to either decline or stabilize over the next 2 years. According to EIU, wheat and palm oil should ease further and stay subdued, while cocoa and coffee, which recently hit record highs, are expected to correct as global supply catches up. These trends should provide margin tailwinds for URC, helping offset competitive pressures and input cost volatility. Taking all that into account, we're forecasting earnings growth of 10.4% in FY26F and 9.9% in FY27F. From a valuation perspective, URC looks attractive, currently trading at a 6.1% yield for FY26F, which is higher than the Philippine one-year bond yield of 5.28%. Plus, the company's strong free cash flow and solid balance sheet, expected to be net cash by FY27F, support continued dividend payouts and share buybacks. Since 2021, URC has consistently exceeded its 50% payout policy, with a DPS CAGR of 6.2% over the last 4 years. Our 95 pesos target implies dividend yields of 4.6% and 4.9% for 2026 and 2027 respectively. So, what could make us even more bullish? We'd like to see the following: better execution following recent management changes, stronger brand momentum in core categories, successful product innovation that boosts market share, pricing stability in its commodity business, and higher dividends, especially given its net cash position and healthy free cash flow. Of course, there are risks to watch out for. These include changing consumer preferences that could impact URC's legacy brands, especially among younger consumers, a slowdown in transformation gains, which could limit operational upside, and the unpredictable nature of commodity-linked businesses. So, to wrap it up, that's a buy call for URC at 95 pesos target price. Thanks for tuning into Market Bets. If you found this helpful, don't forget to follow us on social media for more updates. That's First Metro Securities on Facebook, Instagram, and YouTube, and FirstMetroSec on TikTok. Catch you in the next episode.
Thanks for listening to First Metro Securities Philippine Stock Market Weekly podcast. Don't forget to follow us to get first dibs on our new episodes. For more up-to-date market news and info, exclusive content, and the opportunity to connect with your fellow Filipino investors and traders, join facebook.com/groups/FirstMetroSec and be part of the FirstMetroSec family.
FirstMetroSec is providing this podcast as a general market commentary. Reference to any specific security, product, or entity do not constitute as an offer or a solicitation of an offer to buy or sell any financial instruments or to participate in any particular trading strategy. The statements, comments, views, or opinions expressed by the hosts are subject to change without notice, and FirstMetroSec is under no obligation to update, amend, change, or correct any of the statements, comments, views, or opinions expressed. The statements, comments, views, and opinions expressed by the guests are their own and do not necessarily reflect the view of FirstMetroSec. FirstMetroSec disclaims any liability arising from reliance on or reference to any information obtained in this podcast.
The views and opinions expressed by the podcast creators, hosts, and guests do not necessarily reflect the official policy and position of Podcast Network Asia, the hosts of the program, or other programs of the network. Any content provided by the people on the podcast are of their own opinion and are not intended to malign any religion, ethnic group, club, organization, company, individual, or anyone or anything.